Welcome back. The magic of crypto, is it gone forever? Well, this is what some are saying as crypto goes mainstream. Meanwhile, the Van Eck, one of the largest financial institutions in the US, their CEO is saying that central banks should be getting into crypto now, specifically Bitcoin. Meanwhile, the European Central Bank is warning against it. So, what do we do as investors, as everyday people in these markets? Do we invest in crypto? Do we kind of move on from crypto and just invest in traditional assets, or what? Well, we're going to break it down today and really kind of talk about where we are in the market cycle. We're in the kind of approaching the middle of 2025, and we have seen pretty much just downward trending markets from the beginning of 2025. And this is making people's sentiment about the market very, very bearish. And that could be an indicator that we are moving in the other direction. But as I've been explaining for years on this channel, as crypto becomes more mainstream, as Wall Street becomes more involved in the crypto markets, the volatility to the upside is going to decrease. We're going to see more stable pricing as time goes on. I mean, once you get to $1 million Bitcoin, it's going to be a lot more difficult, a lot more inflow to double that. And so you're going to start to see slower growth in these assets, but that doesn't mean no growth. As you guys know, in the traditional stock market, if the market goes up or down by, or let's say up by 7% in a year, people see that as a success, a successful investment year or passive income type of year. But 7% is nothing in the crypto world, at least historically. So let's understand a little bit more about this. And by the way, don't forget to give this video a free thumbs up and also hit that subscribe button. That way you never miss a new video. We upload almost every single day of the year. But before we go to the magic of crypto, I thought that this tweet kind of really summed up how to think of investing in these markets. Now, this is something that we've also talked about on this channel, what this tweet is about. But basically, this guy who's a former S&P pit trader, 25 years of futures trading experience, says there's a lot of stories out there about traders turning small amounts of money into big numbers. But the truth is, for most people, he says himself included, the journey is anything but simple or glamorous. A lot of times we're at Cryptoviser. What about the Dogecoin millionaire? What about the Shiba Inu millionaire? What about the person who made, $1 billion on Peanut the squirrel? Like, yes, there are going to be cases where people put very small amounts of money in and get very large upside. This is through in crypto, this is in stocks, this is in many different things. But this is not the general story. This is not how most people invest. This is not how most people just like overnight turn into a millionaire. I mean, we've talked about on this channel, like I've even talked to people who are invested, like they'll just go down the list and go all the way to like the 50 millionth cryptocurrency created with no market cap, no liquidity, no project, no team, no usage, nothing. And they will buy that. And I'm like, well, why would you buy it? And they're like, well, it's 1/1000th of a penny. So if it goes up to $1, I'll become a billionaire. And it's like, okay, but for it to go to $1, and you to become a billionaire, that means that this coin that has no team, no usage, no tokenomics, no actual anything built on it or behind it or plans for that, would have to get to $1 trillion market cap, at least, for you to just have $1 billion in value. And then you would have to be able to find the liquidity to sell into to pull that out of the market. Not going to happen on the millionth crypto. Like, it's just not going to happen. But a lot of people do that, right? They see the meme coin season and they want to get involved. But this is a channel about investing and realistic investing, because at the end of the day, if somebody's telling you you're going to become a millionaire on a Peanut the squirrel meme coin, this is ridiculous, right? It really is. Or on a GameStop. Like, guys, GameStop is buying Bitcoin because they know they're about to go out of business. That is a last-ditch effort attempt. So the Bitcoin maximalists are like, yeah, a GameStop is going to buy Bitcoin and put it on their balance sheet. It's like, and then when GameStop goes bankrupt, guess what they're going to do with that Bitcoin? Liquidate it. You think the Bitcoin maxis are going to be excited about that? Anyway, back to the tweet, because I'm going way off topic. Most traders start small, he says. The real challenge isn't turning a small account into a massive one in a short time. It's surviving, staying in the game, and building something sustainable over time. Somebody asked me the other day, a Cryptoviser, back in 2021, you said within 1 year there would be many people who were millionaires in 2021 that would have zero in 2022 because they just kept over trading the market. And that happened. They said, well, how do you know this, Cryptoviser? And it's like, well, most people, they're just thinking about the market today. So when they feel bullish and they're making a lot of money in the market, they just keep reinvesting at the top of the market because they think, oh no, the market's going to keep going higher. And then when it turns around, they keep dumping the money that they've earned or took out of the market or gained in their portfolio, however you want to put it. They're reinvesting that into the market at the all-time record high, thinking that it's going to go higher. And then even if it dips 50%, they reinvest. But then once that kind of turn happens from bull to bear or bear to bull, it's very hard to kind of catch that falling knife, as they say. And so this is where a lot of these people who were millionaires in 2021 are not anymore because it was over trading. And so this is really what we talk about. Like, I'm thinking about long-term growth. I'm not looking at, I mean, for trading maybe pumps, but like we're really looking for long-term sustainable growth. This is why we're talking about tokenomics of the coins. We're thinking about the institutional interest in the coin, the adoption from a back-end integration standpoint, like a Visa or MasterCard network kind of thing, where it's working and you don't even know that it's on that specific network. And so, yeah, this is really about staying in the game, surviving in the markets, and not putting all your money back in. I mean, I know a lot of people, they will just, as soon as they take out profits, when they reinvest their entire portfolio. They're not putting anything to the side as like, well, what if the market does not turn around and keep going higher, right? Anyway, he says the goal should be to grow steadily, to stay independent, and to keep moving forward. Wealth isn't built just by chasing big trades or trying to hit home runs. It comes from discipline, consistently taking profits, using those profits wisely, and reinvesting both inside and outside of the markets, right? This is the same thing. It's like when somebody wins the lottery and they win like $5 million, and this is, a relatively poor person. What typically happens? You see the TV show, I won the lottery and I'm broke now, because they just spend. They're not thinking about continuing the growth of the asset over the long period of time. And so just coming into the money is not going to fix anything. It really has to be the mindset. And this is where you see channels like Minority Mindset on YouTube. I would definitely recommend checking that channel out. I told somebody once who was asking me about, building their wealth for their future, and because they don't have that influence in their life about investing and thinking about the future with money and stuff like that. And I told this person, just go watch Minority Mindset, 30 minutes at least once a week, 30 minutes a week. Multiple years later, they still haven't watched even one video, right? And so they're not looking to change their mindset, right? And a lot of that is what he's talking about here, right? Because if you're just chasing the big trades, you're always going to be chasing these big trades, and you're not going to be thinking about what happens if these trades go wrong. What is the hedge against that? What is the emergency plan? What is plan B for that? What if this investment takes longer to move higher than what I was anticipating, right? Anyway, he says smart traders understand the importance of putting one foot in front of the other, growing gradually, making smart moves, and building a solid foundation. In the end, the goal is to reach a point where trading is a choice, not a necessity. Success comes from commitment to the long game. And that's true. It's very similar to like when you start a job, you have to put a lot of work in, right? You're gonna have to work a little extra. You're gonna have to work a little bit harder. You're gonna have to do things multiple times. But once you get it, everything becomes much easier. And it's the same thing with trading, right? The more money you have, the less of your percentage of your wealth that you actually have to put at risk to grow it, right? Like for instance, if you have a total net worth of $10,000, you can't really do anything with that from a standpoint of either you're just investing it or you're just saving it or you're spending it, right? But when you have like $10 million, you can say, I'm going to take $500,000 and just trade it, and everything else I'm going to keep in a safe investment, right? So you're trading $500,000 to the normal person, $500,000, doubling it, that would be a huge win. But if you're looking at it from the $10 million wealth standpoint, 500,000 is only 5% of their net worth at $10 million, right? Where if your net worth is $10,000, 5% of that is $500. Trading $500 is very different than trading 500,000. And so, that's kind of what he's talking about here, and I completely agree with that. And that's really where I wanted to start this video on understanding what this is about, right? Crypto is a journey. Investing is a journey. It's not a destination. If you think that you're just going to wake up one day and be rich, you're in the wrong mindset. This is the same mindset that people have is, oh, one day my boss is going to, promote me and give me, triple my salary. If you got promoted, they're giving you 10% more, and they're going to tell you to move on. Right? That's it. The idea that somebody's just going to hand you money or just pass this to you, it's just not going to happen. And the same thing is in trading. There is no safe trade. There is no easy trade out here, because as much as you're trying to get the upside, there's a lot of traders that are trying to catch the downside and are going to trade against you. And there's a lot of traders that were in that way before you even got involved. And keep in mind, even if you're watching these videos, you're way ahead of the normal person. The normal person is jumping in Bitcoin at $120,000, right? I mean, that's literally what they're doing. Every single cycle that I've been in so far, at the top of the market, I have people asking me how to invest. Never at the bottom of the market, never when the market is sideways trading, and not even on the way up to the all-time high. It's always at the high. Like when I think back to it, over the years, every single time, people have inquired about, how do I invest in crypto? What do you think about this crypto? Or just ask me something about cryptocurrencies. When they have asked, it has always been at the local top or the macro top of the market. So that's a very big top indicator for me. Even just a few months ago, during the Trump pump, somebody said that they wanted to invest, and I said, well, why now? We're at the top of the market. The answer was pretty interesting. Anyway, so founders now believe that the magic of crypto might be gone as it goes mainstream. And we've definitely talked about the potential slowdown in excitement around crypto. Founders believe that the magic of crypto may have been lost amid the ongoing push for mainstream adoption. In the process, some proposals, such as Bitcoin's digital gold narrative, have demonstrated staying power, while others are struggling as the space matures. Right? I mean, if we go over to what Michael Saylor says, right? Michael Saylor, he's calling for $13 million Bitcoin. I mean, come on. $13 million. But here's the deal, guys. Michael Saylor is a bull. Like, this is his job, to pump Bitcoin. It's not even to pump MicroStrategy, really. It's to pump Bitcoin. Remember, Michael Saylor doesn't own MicroStrategy stock. He doesn't own any. He sold it all in over the last few years. He owns Bitcoin. And really, the play of MicroStrategy, in my view, is utilizing MicroStrategy's play to pump Bitcoin. Because Bitcoin will be fine, even if MicroStrategy is not. Like, let's say MicroStrategy liquidates and they go under and they have nothing. Bitcoin's still fine. Even if they have to liquidate that Bitcoin, Bitcoin is still fine. And they would probably not have to liquidate the Bitcoin, because they would be bought up by another company who just wanted all that Bitcoin that MicroStrategy probably has. So he's playing a very strategic gambling game. Where he has the upside, right? Where he is the house, because you can't really lose if the Bitcoin thesis plays out, which so far it has. Store of value, anti-debt, anti-fiat, limited supply, which is the opposite of fiat. So as fiat inflates, so does Bitcoin, because the dollar is devaluing. If this thesis continues to play out, and it may or may not, I believe more likely than not, it will continue to play out just based on the math. But there's obviously other factors that can come into play where the Bitcoin thesis is no longer valid. But for now it is. And so as Bitcoin's going up, Michael Saylor, he understands this. He is the house. Well, not he, but Bitcoin is the house, right? The casino is all these markets. And so you have to look for where's the edge in the market, right? Is it in the yen? Is it in the yuan? Is it in the dollar? Is it in the euro? People trade currencies all the time. People trade debt all the time. People trade a lot of different things. Michael Saylor, he views Bitcoin as basically, if you're the casino, you're the winner no matter what. The house always wins. Or if you're the gambler, you have the upside, where the casino doesn't have the upside because the casino is the markets, right? If you think about it that way, the casino is the markets. And so while all the other markets may, like if you think about roulette, right? All the other markets may have, 5 green spots on the board, which gives the house even more. But if you think about the Bitcoin board, it's all in favor on red or all on black. It is so geared because of the fiat system is hyperinflating all the currencies around the world. I mean, guys, even the central banks are now kind of getting involved, right? President of Euro Central Bank Christine Lagarde urges swift action on the legislation groundwork for the digital euro, calling it essential for EU competitiveness and resilience. Let's listen to what she says. And so, yeah, by the way, so how this all ties in, well, guys, everybody's getting involved in crypto, whether it's digital dollars, digital euros, because they understand that the fiat currency that we currently have, whether it's the euro or the dollar, it's hyperinflating. Now, the merge or the change over to digital will change the mindset of all this debt, and they may be able to wipe it out, but that's a whole different story for another day. Really, we're kind of talking about the connection between Bitcoin here and really how we can capitalize in our portfolios on that. Let's listen to Christine Lagarde.
Geopolitical environment, it is even more urgent for fiscal and structural policies to make the euro area economy more productive, competitive, and resilient. The European Commission's Competitiveness Compass provides a concrete roadmap for action, and its proposals, including on simplification, should be swiftly adopted. This includes completing the Savings and Investment Union, following a clear and ambitious timetable, which should help savers benefit from more opportunities to invest and improve firms' access to finance, especially risk capital. It is also important to rapidly establish the legislative framework to prepare the ground for the potential introduction of the digital euro. Governments should ensure sustainable public finances in line with the EU's economic governance framework and prioritize essential growth-enhancing structural reforms and strategic investments of the digital euro framework to prepare the ground for the potential introduction.
There's no potential. There is going to be a digital euro. Now, whether it's central bank issued or whether it's something like Circle or another company issuing the digital euro, that's a whole different story, but it is here, it is coming. And Van Eck's CEO, one of the large financial institutions in the US, he said there's a good chance central banks will start to get more aggressive in adopting Bitcoin, not only as a store of value, but as a medium of exchange. And listen to the wording, he's saying more aggressive, meaning that they're already involved. Let's listen in. And by the way, don't forget to give this video a free thumbs up. Hit that subscribe button if you want to help support the channel by becoming a channel member. Click the join button to learn more or leave a super chat down below.
We think there's a good chance that central banks and sovereign wealth funds will start to get more aggressive in adopting Bitcoin, not only as a store of value, but also as a medium exchange. So this year, the Czech Republic, the governor of the central bank there, has initiated a study to analyze Bitcoin for inclusion in their central bank reserves. And then just this week, Russia did a trade with China, partially denominated in Bitcoin, beginning to really use Bitcoin for the first time as a medium of exchange. And that's not for individuals buying coffee, that's for large-scale transactions where countries are using Bitcoin as an intermediary currency to do, say, an oil trade. And in that scenario where Bitcoin-denominated trade could be, say, 5% of global trade, we get to a $3 million price per Bitcoin. That's a long-term prediction, like 2050, but that's going to be necessary, we think, to elevate Bitcoin.
So he's saying multiple millions of dollar valuation is going to be 2050, which effectively is another 25 years from now. So again, you can't invest in an asset and expect an overnight price change to $3 million or $13 million, as Michael Saylor is saying here. And the Pantera CEO believes that $745,000 is going to be the top, citing mass adoption, institutional support, and a potential $15 trillion market cap. I don't know. I really don't know. It really depends on kind of the macro environment. But again, this is a journey, right? Bitcoin is really, I view as kind of the digital gold. Like you don't sell your gold unless you need to, right? If you have jewelry, you're not selling that unless you need to, unless you need the money. So this is really essentially what Bitcoin is. Everything else outside of Bitcoin is just kind of like a gamble in the markets, at least for me. But a lot of other people are saying not really. But I don't know. Analysts say that Bitcoin price might be gearing up for the next big move. According to a popular crypto analyst, the Bitcoin price could be preparing for the next big move in either direction over the next few weeks. I mean, come on, at least give us a direction. Is it up or down? So anyway, a crypto analyst shared an interesting analysis of the Bitcoin price while highlighting the current layout of the world's largest market cap crypto. Um, his analysis basically revolves around the price of Bitcoin bouncing off the support and resistance levels on its 1 hour time frame. Listen, is the market due for kind of a move? I do think so. I mean, if you look at the price of Bitcoin, it's been pretty stable for a while. And this is kind of, I think the creation of kind of like a floor, right? We've been in this like 80 to $90,000 range for pretty much the last couple of months. Now we could go further down. We've seen a lot of different cryptos go much further down, down 80, 90% just on their recent moves. But in terms of Bitcoin, I do think what we're going to see, and I've explained this on the channel extensively, is we saw Michael Saylor and MicroStrategy, okay, basically purchasing all throughout the cycle. But the most of the purchases were right here at the top, right at the tippy top, where they kept taking out debt and buying more and more Bitcoin at the end of 2024 into early 2025. But then what we started to see, especially in February, is all the ETFs started to unload all of their Bitcoin, not all of it, but large quantities, like $4 billion over the course of a week. And so it appeared that the ETFs were becoming the liquidity for the MicroStrategy purchases, because you would imagine MicroStrategy buying $2 billion in like a weekend tranche on Coinbase would drive the price up, but it didn't. Why? Well, we saw the offset where basically I think that some of the ETFs kind of do some paper trading. It may not be exact paper trading, but you can't just dump a $2 billion order on the market. And so I don't think that MicroStrategy is purchasing that way. I think they're purchasing in very small tranches over the course of 2 or 3 days, meaning that maybe they're buying like, $10 million at a time with 4 hour in 4 hour increments or something like that. So it doesn't really move the market. But the market obviously will be moved with $2 billion of more inflow in 24 hours. So, and you also have to understand, like, where is that liquidity coming from? Well, now we know that the ETFs were selling around here. So to me, it appears that the ETFs are the liquidity for MicroStrategy purchases. Well, since then, MicroStrategy has stopped purchasing. Right, they've done a few small little purchases since we come down to $80,000, but you would imagine they should, because they were buying at the top at 100,000. Now we're down 20-30%. They should probably be buying some more, but we're not really seeing any more inflows into the ETFs, despite what some analysts are telling you. You can go to Farsight Investors' website and see the actual ETF flows. Most of the ETFs are the Bitcoin ETFs, and in aggregate, all of them together combined are basically net negative in April and net negative in March and net negative probably in most of February as well. And so that's tens of millions of dollars, hundreds of millions of dollars on certain days exiting these ETFs. And I believe it was to provide the liquidity for all of these large purchases from MicroStrategy, Marathon Digital, all these companies that are buying. But here's the deal. All that money that was coming out of the Bitcoin ETFs, I think it's sitting on the sidelines. And so when the Bitcoin ETFs come and re-enter the market and start purchasing again, who is providing the liquidity for these Bitcoin ETFs? Who's providing the Bitcoin for them? Because when MicroStrategy was buying or Marathon Digital was buying, the ETFs were the liquidity. But if the ETFs are buying back in, who's the liquidity? Remember, when the Bitcoin ETFs first started purchasing back in the beginning of 2024, basically around here is when they started purchasing. You could see that massive leg up in the Bitcoin price from about 40,000 to 70,000. This was because the ETFs started purchasing. But remember, who were the ETFs purchasing from? Massive quantity from Grayscale. They were just changing hands, where Grayscale was offloading tens of millions of dollars of Bitcoin a day. And then the ETFs were purchasing tens of millions of dollars of Bitcoin a day. So it was a net neutral, basically, maybe a little bit extra. But Grayscale was the liquidity, and then FTX was the liquidity, and then all of these other bankrupt companies were the liquidity for the ETFs. But there's no liquidity left for the ETFs. There's none left. And so the outflows from the ETFs will stop at some point. And when it reverses, in my view, that is the point. That is the indicator. That's what I'm watching very closely. And once I start to see tens of millions or hundreds of millions of dollars of inflow per day into the ETFs for a consistent amount of time, like at least a week, at least a full week, with no outflows, and this will probably coincide with the Federal Reserve reversing their policy and kind of the macro markets kind of moving up. But when we start to see hundreds of millions of dollars inflowing into the ETFs, and no major news about Mt. Gox selling or Coinbase selling or MicroStrategy, whoever's selling, no major announcements of that, I would anticipate that is going to be the next major leg to the upside. Because right now we have a lot of money on the sidelines from all of that ETF outflow over the beginning of 2025. And so the liquidity, I don't think, is going to outpace. It's not going to be able to outpace the purchases. And that's how a supply-demand shock occurs. When the supply-demand shock is going to occur, I don't know. But it's going to occur. And so we have to be prepared for that on the one side of it, right? This is going back to the tweet at the beginning of the video, right? It's not about chasing these pumps. It's about knowing the fundamentals of how these cryptos are going to move. And listen, some people are going to say, well, Cryptoviser, if Bitcoin goes up to $150, it's really only double where we are today. And it's not likely going to go much higher than that. So why would I invest in crypto or Bitcoin versus altcoins? Well, that's a great question. And that brings us to this. Altcoin unit bias is absolutely destroying crypto newbies. Now, this is from a Bitcoin maximalist, Samson Mao, who said that once you remove unit bias from altcoins, it becomes clear how overvalued altcoins like XRP, Solana, and Ethereum actually are. Whoa, shots fired over here. Anyway, Samson Mao says that Bitcoin dominance hasn't yet exhausted its upside trajectory after analyzing how altcoin prices would stack up against Bitcoin if all were on equal terms. His forecast for Bitcoin dominance to rise further comes as the ratio has already exceeded the levels many crypto analysts expected it would reach by late last year. He says, quote, unit bias is absolutely destroying the uninitiated. Basically, he suggested that unit bias, which is a psychological method in behavioral economics that suggests that individuals usually like to own a complete unit or stock, regardless of its price and size, often causing less experienced investors to assume cheaper altcoins are better value than owning part of a Bitcoin. Now, I never knew that there was an actual term for this, but this is true. Like people, this is the psychology in the markets. We've heard it, we've seen it. I mean, go ask your friends, show them a Coin Market Cap or CoinGecko or whatever, and say, look at the top 15 coins or top 20 coins. Which one would you invest in, right? And if they say, well, I don't know anything about them, just be like, okay, yeah, but you want to become a millionaire. Which one are you going to invest in? Like, a lot of times, people will look at this and they'll say, Tether. And you'll be like, well, why Tether? It's only $1. But like, yeah, so you have $10,000 to invest. What are you going to invest your $10,000 in? They're going to say Tether. Like, why? Because I'm going to get 10,000 Tether, right? Even though if you get $10,000 worth of Bitcoin, you may have less of a Bitcoin, but the potential Bitcoin's going to go higher in value is significantly almost 99 to 1 against Tether, right? So that is basically how people look at the market. So then they go down the list and they're like, if I can get XRP, but they don't understand the tokenomics behind XRP, that Ripple is selling XRP onto the open market, which is keeping the price suppressed, right? They'll keep going down the list and say, oh, I want to buy Tron. But they don't know that Tron is basically maybe a bot blockchain that nobody in the US is really building on just yet. Maybe that's going to change with World Liberty Finance investing in Tron. But right now it's not, right? So why would you invest in Tron? They'd be like, well, it's 24 cents. I can afford 24 cents versus I can't afford $84,000. And so what Samson Mao is saying is you can buy 1/21 millionth of a Bitcoin supply for $85,000. What happens if you remove unit bias from altcoins to calculate the equivalent of 1/21 millionth? He pointed out that Ether would be priced at $9,200, XRP would be priced at $5,800, and Solana would be priced at $3,400 from their prices today. He said, no way these altcoins are worth that much. So basically, he's comparing where Ethereum is versus where Bitcoin is, right, from a market cap perspective. An anonymous Bitcoin proponent said that unit bias is a core foundational framework for the normie mind, saying cheaper is better. Samson Mao said that most altcoins take advantage of unit bias by implementing very high total supply so that market participants can't figure out what they're buying. Again, not understanding the tokenomics. This is why on this channel, I have a lot of videos about tokenomics. They're not necessarily called tokenomics. A lot of them are called, should I buy this crypto? Is this crypto right for me? Also, the videos comparing different cryptos. And by the way, don't forget to hit subscribe. That way you never miss any new videos on this channel. And also hit that give the video a thumbs up. Hit that thumbs up button as well. Lets me know you guys enjoy this content, and it's free to do. But our unit bias here on YouTube is only one thumbs up you can give per video. I wish you can give 10, but you can only give one thumbs up. Anyway, yeah, I mean, this is something that you guys really have to think about because, I mean, most of you are probably, understand at least the general tokenomics of many of these coins. But as I just showed you, there's people who are still investing in XRP and they have no understanding of the tokenomics. I cannot invest in XRP at this point. It's just not an investable asset. It doesn't matter what partnerships, what regulatory environment, what Ripple is doing, it doesn't matter. Ripple still has 35 to 37% of the entire the entire maximum supply of XRP, and they have said they will continue to sell that on the open market. So if an XRP ETF comes out, guess who the ETFs are buying from? Not from you. They're buying from Ripple, and therefore the price can't go up, right? Based on what we're talking about here, right? Bitcoin is limited supply. All the coins are basically in circulation at this point. So this is something to think about as well. To understand where these altcoins are, why people are investing in them. And I mean, it is an investment strategy, guys, because no matter how many videos, one does on this, there's going to be newbies who come in and say, well, I think I'm going to buy XRP because it's $2. And I'm also going to buy Tron because it's 24 cents. And so if you understand this unit bias and you believe that that's going to be the psychology in the midst of the bull run, then yeah, it's probably a strategy. I mean, this is, I believe, how Cardano has been able to maintain its top 10 position for so long. Even in the last cycle, we talked about this. We talked about how Cardano has so many units, right? 45 billion total ADA. There's about 36 billion in circulation right now, but that's significantly more than Bitcoin. Even Litecoin did that, right? Bitcoin has 21 million. What did Litecoin do? 84 million. So it's 4 times the supply that Bitcoin was. Why did they do that? I mean, if you believe in the unit bias theory, they probably did that so that the price can stay elevated. I mean, obviously Litecoin has stayed elevated, but not in line with many of the other big altcoins as well. And so this is where everything goes back to Bitcoin maximalism. And I've told you guys on this channel, the longer I go understanding and being in these markets, the more I become a Bitcoin maximalist. And I think that all roads do lead to Bitcoin. I think that Bitcoin is the supreme. These other ecosystems are going to grow, especially like Ethereum. The others, they're just a conversation right now. We will have to wait and see if they gain traction. Think about all the companies that have been around for a while and then they just really didn't gain traction. That's okay. It's a constantly evolving ecosystem. And this is where, as an investor, you have to understand you cannot be a maximalist as an investor. You have to be able to say, okay, at this point, this coin is no longer investable at this point, right? It's no longer going to go up based on the tokenomics, based on the development, based on the macroeconomic, and literally you know, for instance, let's say Cardano or Avalanche or Stellar, they may not be able to succeed, not because they don't have good technology, but just because another ecosystem has better technology or faster technology or more adoption and use cases on that technology and more ability to adjust and change as, the technology needs adjustments. That could mean that other coin is superior and that your coin is inferior. But it could also mean that your coin is just not set up for all that. And that's okay. Time to move on to another ecosystem, another asset. Because if you stick with an asset that's underperforming and will continue to underperform for years and years and years, you're missing out on other opportunities. And this is why maximalism is really bad for an investor. And that's why we block maximalists on this channel because we don't have time for that. We're looking at the prices, we're looking at the markets, and we're looking at our opinions and basically making moves in our portfolios to reflect that. And remember, this whole thing about investing is a journey. If you got $5 million tomorrow, what would you do with it? Right? Most people will spend it. It's already spent before they even got it. They'll be like, oh, I'll buy a new car. I'll pay off my mom's mortgage. I'll buy my friend, a new car, maybe get them a new apartment. And it's like, what? You just spent all the money. And then they're not thinking about overhead, right? They go buy a mansion and it has, $10,000 a month in electricity bills. So these things that you don't think about. That's why if you take the journey, you learn these things along the way. And then you realize that investing is no destination, right? There's no I'm rich, because when people get a higher amount of wealth, they want to make sure that wealth is protected. So they just invest differently. Maybe they invest in real estate. Maybe they invest in commercial real estate. Maybe they invest in only Bitcoin, maybe only yield generating income, like very safe treasury bonds or whatever. That's what some people do, right? To protect their wealth and make sure that it sustains for generations to generations. So that's really what this is all about, right? In improving our futures, securing our retirement, and also hopefully picking the right investments. I do believe that it all leads back to Bitcoin, but these altcoins, there's a lot of money to be made and it can be a lot of fun. Hopefully you guys enjoyed today's video. Don't forget to give the video a free thumbs up, hit that subscribe button, and I'll see you when I see you. Crypto on.